Today, we are diving deep into a company you've definitely seen but might not know a ton about, Cintas Corporation. We're going to pop the hood on their latest earnings report and see just how well their business engine is really running. Let's get into it.
I mean, come on, you've seen them, right? Those clean, white trucks with the Cintas logo? They are absolutely everywhere. Weaving through business parks, parked downtown. They're just a constant presence.
But what's the real story behind that logo? It's one thing to see the trucks, but what's the business that keeps all those wheels turning? And more importantly, how are they actually doing? Is the business as clean as their trucks? That's what we're here to find out. So at its heart, Cintas is all about getting other businesses ready for the workday. And they do that by handling a ton of stuff. We're talking uniforms, floor mats, keeping the restroom stocked, and even really critical things like first aid supplies and fire protection services. They're a one-stop shop for over 1 million businesses, which, is how you become a Fortune 500 company.
Okay, here's our game plan. We'll hit the key numbers for the quarter. Then we'll dig into what's driving the growth. We'll hear from the CEO, and finally, we'll look at what they're expecting for the rest of the year.
All right, let's get right down to it. Here is the scorecard for the first quarter.
First up, the big one, revenue. For the quarter, Cintas pulled in a whopping $2.72 billion. That's the total amount of money they generated. And after all the bills are paid, the bottom line, their net income, was a very, very strong $491.1 million. That's pure profit. Now, if you're an investor, here's the number you're probably watching. That profit works out to $1.20 for every single share of stock out there. That's your EPS, a key measure of how profitable the company is on a per-share basis.
Now, those numbers are impressive on their own, but the real story, the context, comes when you compare them to last year. Look at this. Revenue and net income are both up 8.7%, and earnings per share, that jumped over 9%. That is just solid, consistent growth right across the board. Really impressive stuff.
Okay, so that just begs the question, right? Where is all this fantastic growth actually coming from? Let's peel back the onion a little bit. But first, we got to quickly talk about a term you'll hear all the time in finance, organic growth. This is so important. It's the growth a company gets from its own core business, just selling more stuff and serving more customers. It doesn't count growth from buying up other companies. You could say it's the real growth, and it tells you a lot about how healthy the business is. And for Cintas, this is the story of the quarter. Check this out. Almost all of their growth, a massive 7.8%, was organic. Growth from buying other companies was less than 1%. This is the key takeaway, folks. Cintas isn't just buying its growth, it's earning it, the old-fashioned way. And what is that core business that's doing all the heavy lifting? Well, it's pretty clear, isn't it? A full 77% of their money comes from uniform rental and facility services. That is the absolute backbone of this company. So we know the what. The numbers look great and the growth is real. But how about the why? How are they pulling this off? For that, let's see what the view is like from the corner office.
The president and CEO, Todd Schneider, really highlighted their disciplined execution as the reason for the strong quarter. So let's break down what that corporate speak disciplined execution actually means in the real world.
It really boils down to this three-part playbook. First, they focus on just being excellent at their core job, day in and day out. Second, they're not sitting still. They're investing in better technology and in their people. And third, they're smart with their money, plowing some of it back into the business to grow and giving some back to the people who own the company, the shareholders. A great quarter is, well, great, but you know Wall Street. The question is always, what have you done for me lately and what are you going to do for me next? So let's look at the forecast. And here is the headline news. Because of this strong start, Cintas is feeling more optimistic about the whole year. They are officially raising their financial guidance. In the business world, that is a huge signal of confidence. So what does this increased confidence actually look like in dollars and cents? You can see they've nudged up their expectations for both revenue, now well over $11 billion, and their earnings per share. These might not seem like massive leaps, but trust me, for a company this size, it's a clear statement that they believe the good times are going to continue.
And that kind of brings us to our final thought. Cintas has this incredible window into the American economy because they serve over 1 million different businesses, big, small, and everything in between. So when a company like that, with such a wide reach, is seeing strong, real growth and is confident enough to raise its forecast, what does that tell you about the health of the economy as a whole? It's definitely something to think about.